Is trade top of your agenda? Are you picking stocks according to the earnings outlooks that we've been getting?
Well, look, I think the trade, getting resolution of trade is the critical issue right now from a macroeconomic growth perspective. If we have a destructive trade set of relationships between the two biggest trading partners in the world, the United States and China, that's really bodes poorly for earnings for companies all over the world. So we have to get that resolved. It has to be resolved in a constructive manner. But if we get that resolved, we can go ahead and start thinking about corporate fundamentals again, start thinking about earnings growth. And I think that is a positive, optimistic thing for investors and for markets in general.
Would a stalling of the process help in any way, or are you effectively on pause until this gets sorted out, for the longer term?
I think continued pause and continued delays is problematic. I mean, we've already seen a lot of damage because of the economic uncertainty as a consequence of the pause. So I think resolution, the quicker the better. We've already got threats of increased trade tariffs if we can't get to resolution early on. I think business wants to see resolution so they can start planning and making long-term forecasts. Without that, it's really hard to invest and grow. And so we're going to continue to weaken economies all over the world. It's particularly hitting China hard. It's hitting the United States. It's also hitting Europe, Latin America, all over the world. This needs to get resolved.
Is this more important? I'm trying to work out kind of in terms of what's the most important factor for the markets now. Would you say trade is more important than the Fed?
I think so. I think the reason the Fed has become important is because this trade friction has caused a lot of economic uncertainty. And so when you had the Fed that was tightening throughout much of 2018, it wasn't a problem. It only became a problem when trade negotiations became really hostile and we really amped up the trade war rhetoric. That's when the Fed became problematic. What happened there is you've got the trade wars, which are inherently recessionary, coupled with a tightening Fed and tightening central bank activity potentially all over the world. That is two recessionary forces happening at the same time from the governmental perspective, and that's what really threw people off. So I think it's not really the Fed, it's just that the Fed needs to be paying attention to the fact that there are these other disturbances. And the market, and certainly I, was very fearful that the Fed was just tightening and tightening just so they could go ahead and keep on plan and keep on autopilot, so to speak. Meanwhile, ignoring the frictions and the uncertainties that were happening primarily because of trade issues. If we can get trade resolved, frankly, the Fed can probably go back to a more tightening regime, but not before then.